Good evening, everyone. This is Michael here at ARM Capital, doing a little bit of stock analysis and alerts and levels that we're watching for the week. Hope everyone had a good New Year's and ready to rock and roll for 2019. Last couple of weeks have been pretty uneventful. Been pretty much a bear rally. Hasn't broken any levels that concern us yet. Some of the levels we're watching on SPY is at 256 level. I think I was looking earlier. We can look now. Futures were at 255. Close to the open level in the session now. That 240 to the downside. We'll bring that down to 235 probably, and 256 to the upside as we'll start to approach our previously broken support lines, which could be fun. Currently, we're in these QQQ puts for Friday. After it broke its 150 level, we were trying to take that down to the downside. After some of the political news that came out about the trade deals maybe happening on the 7th or further negotiations, we have seen a rally in the markets as to be expected as a temporary prop. But we don't, unless we're breaking this 160 level on the Qs, we're not really too concerned about the long-term or medium-term trend in that. A couple other stocks we're watching after Apple. Let's start with Apple, actually. Yeah, huge sell-off after its misguided gap down all the way up here. You got a little bit bullish after the Trump administration started tweeting about trade deals, as Apple is directly affected by those negotiations. But if we break down below 141, we're still open to take some short positions, although we think there's a couple other places that are better to take advantage of the decline in Apple's reduced guidance in 2019. Some of those are the chip makers. Semiconductors are, and pretty much any computer supplier appliance to Apple, they have some significant downside on vendors lowering their overall buy rate in these semiconductors. So we're looking into this sector a little bit. I think Micron is one of the ones that Apple uses more. NVIDIA is not as much. They're more GPU focused. However, they have seen terrible breakdowns since October. So entering these levels, 142 and 125, before we take any position. Oil, still a bit shaky right now. We might have found a bottom. We might haven't. But if you want a little bit of exposure to the potential further downside of oil without taking on spot, we recommend looking into like Chevron. Some of the other COP is another one that we will look at too a little bit later. Chevron is very, very large compared to COP, so their balance sheet's a lot stronger and should weather a little bit better. However, it's harder for them to adjust to their future spot prices, so their actual revenue on barrels may be a little bit lower than COP, for instance, and especially lower than a lot of those other smaller producers, but we're not trying to play anything too small. Again, from last week, still looking at HD. We still want to see some downside. Haven't broken through. This is the 50-day, so not really too concerned yet. A little bit underwater, but it could turn around nicely in the next couple days or next couple weeks. This was I believe a month and a half trade. McDonald's still waiting on these levels. Started breaching this resistance, so we'll see if we break above this moving average. We might take a position more to the upside, probably by a $5 spread, just to reduce some risk. Would be what we're looking at. IBM just broke above its previous support, so we want to watch the action right around this moving average, see if it goes in or not. This recommendation kind of just fell apart right after we pretty much said there's a little bit more upside to this moving averages, but that doesn't look to be the case anymore. We'll keep monitoring this, but this was a short-term trade, and it looks like it's going to be a wash for us. I'm sorry, not a wash, a loss for us. JPM approaching this 100 level again. Point to watch. If we do see a further continuation in this bear market, we love financials on the downside. If you're looking to be bullish in tech, Twitter has fared very well, especially in October, November. It even gained some. A recent sell-off, held in support, looking for some more upside. Walmart right around that support level. We saw this huge break, define a range, retract a bull run, and you're seeing a chopness. You see a reflection of the same, pretty much a measured move on both ends from the long side to the short side. Approaching this again, will it go range bound or back down? I'll wait and see. Walmart fares pretty well in bear markets, so it's one thing that we like is either a sideways trade or maybe slightly up as a spread or something that's hedged. I found this through when we were scanning through our stocks. This looks terrific, to be honest. I mean, even look at October. You had chop, you had a couple of drops, but ultimately it did not break below its 100 moving average. So that's pretty strong. Just broke or tried to break its 100 again here right after Christmas. Rebounded, and now it just bounced off its 50. So if you want to take this to the upside, you can take a $4 or $5 spread on this. $2-3 spread. You don't want to be taking it above 80. That looks good to us. Last one we got is American Airlines. With the gas prices and oil prices going down, this is something that airlines benefit massively from because they use so much of it. So if we do go sideways, or there is, actually formulation of a trade deal talk, we could see some further upside in our equity markets, and airlines wouldn't be a bad place to look, especially with the current prices of oil. It will be realized probably in this next quarter, at reduced operating margins, which will be great for the stock. Let's take a look. All right, well, that's all I got for you. We get back to watching if Woodland can hold on to the Century Cup tournament. I'll see you tomorrow. Look at futures, and have a great night.